Greetings in the name of Yahusha HaMashiach, Melech of Yasharal, Kohen forever, according to the order of Melchizedek. All esteem, honor, and glory unto our Lua, Yahuwah. My name is MELEK Shelomoh. This is MELEK Shelomoh Trading. Today is the 1st of April, 2025. It's 5:39 p.m. Eastern Time. And I'm going to do a trade recap here. But before I do that, let me just play this.
General disclosure. All MELEK SHELOMOH Trading LLC materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
Who changed that to a man's voice? I didn't have a man's voice there. I'm going to have to go back in there and change it back to the woman's voice. I don't like his voice. All right, so let's see here. So I was looking for Wyckoff theory distribution structure around this level here, Camarilla R3 and the central pivot on the weekly levels. This is higher time frame pivots, right? So that's a significant pivot level. I guess bigger institutions, they trade in a bigger range and they probably pay more attention to these kind of pivots than really the daily pivots, right? I mean, they pay attention to everything. All the algos pay attention to everything basically, but I guess they would execute more on these bigger time frames, right? So let me just pull this across real quick so you can see the trade and view candle chart. Right, so I did this in I mentioned this in my trading setup video. I think it was for the weekly outlook, right? I was looking for a distribution structure around this level here. So it's a golden pivot zone because we have weekly Camarilla R3 and you can see behind there is, you see that P? Let me see if I can make that bigger so we could show the peoples. Right, 56.8750, right? You can look over here, you see the levels. Red is Camarilla, the blue is the central pivot. So I was looking for a distribution structure, a Wyckoff theory distribution structure around this level, right? So I'm looking for that on basically the 5-minute time frame, right? So we're going down to the 5-minute time frame, and this is the distribution right here, right? So this distribution is basically playing out on a longer time frame than usual, right? It's happening from 11:10 to basically 12:20. So usually my distributions, what I look for, don't really last that long. It's basically like a 5-minute, 6-minute, 10-minute, 15-minute distribution, right? So they kind of materialize quicker than this one materialized. But this is something I learned from my mistakes today. When we're interacting with these higher time frame participants or levels, they take more time to execute more volume, right? So their distribution or Wyckoff theory structure would be a little more, will take a little more time to execute, right? So if we have preliminary supplies, we have buying climax, we have automatic rally, we have up trust, we have the push down, we have the LPSYs, and you get the trade, right? It's simple. It's nothing different, right? You get the trade all the way from, let's see, if I took this trade at 56.88, I could get all the way down with proper management to 56.28, right? So there's nothing wrong with the setup. There's something wrong with what I did. So let's go into what I did. Right, so on the heat map here, this is where the preliminary supply started, right? So on my time frame, this would look somewhat like a Wyckoff distribution altogether. This wouldn't be just the preliminary supply, but since we're interacting with this level here on a higher time frame, we would get more order flow, right? Which would create a bigger structure, a bigger distribution structure, right? So I was looking at this and just trying to map out my Wyckoff theory distribution, labeling it and stuff like that. So this was the preliminary supply. We got the pullback, right? You get the initial pullback, we start pushing up, right? So we push up to here, we get heavy volume, we get the buying climax, right? Come on, move. Right, so we got bigger bubbles, bigger volume, we get the buying climax, right? So I decide to take this short too late because this is part of my setup. If you get the buying climax, it's going to create the automatic reaction pretty quickly, right? It's not going to be the full flush down, right? Because we're not distributing as yet. This is just the buying climax, the exhaustion, and we get immediate selling to a certain level, right? Me entering this trade here is way too late, right? You're supposed to enter this trade right here. Not a trade recommendation. This is just my setups, right? So I get the pullback here. Another mistake, I'm taking another short before the uptrust has materialized, right? So altogether, this is what is causing the mistakes I did today, right? So we're pushing up on this Camarillo R3 and higher time frame central pivot levels, and these little pullbacks, I'm thinking, okay, take the short, stopping out, break even, take the short, break even, well, lost on that trade, take another short, right? Because I'm thinking, oh, it's gonna break down, right? Getting stopped out again, right? So I actually did a nice trade, a 365 earlier in the session. Nice quick trade, netted me a nice little profit. I could have stopped with that, right? But I was planning for this trade here so much that it kind of skewed my outlook on trade management and risk management, right? So taking the trade thinking, oh, I'm going to make it back. Here's another trade, right? Push up, thinking that's the uptrust, sell, pull back, stop me out. Okay, that's the uptrust, sell, pull back, stop me out, right? And at this point here, we actually push above the Camarillo R3 daily level, right? So the thing I was as I was saying again, on these higher time frames, these levels are not exact. You get a lot of volume around these levels. You could push way above it to create the uptrust, right? We could push way above here, even up to 5,700 from 5688. It's only 18 points, right? So actually not 18 points, it's only 12 points, right? So my judgment got skewed so much that I actually went long here thinking, okay, we have a breakout of Camarillo R3, we holding above it, let's go long. That was a stupid decision. Exited immediately as I saw this big buy, this big selling coming in, because I know my setup is right there, right? So this is the uptrust level, right? From here all the way here, we have a lower point of supply. This is the highest level right here. That's the uptrust, right? And I jump out of that trade, that stupid long trade I did, and I went heavy right here, right? So now that I actually got the setup, the trade actually went in my favor. But the thing is, I went heavy size, trying to recoup the losses, so I was nervous in holding on to the trade, right? So as I'm pushing down here, right, where did I exit? Let's see, I exited at 56.81, right? And there is the exit right here, right? Now we're running into liquidity, right? We're running into heavy liquidity and stuff. So it's basically a premature exit right there, because we have the heavy selling. I was worried about these volume bars. When you get these sweep downs, you get these counter rotations, and I'm worried about the P&L so much and holding on to the profit that I exited here. There was no real reason to exit because we didn't really break above this structure, right? So if I managed this trade properly, I could have pushed down, right? We're not violating structure. This was the only thing that maybe could violate structure right here. We got this big push up, but we're getting buying sweeps. Could have still held on to this. Got another buyer right here, creating a lower point of supply from this one here. If I was really careful with management, I could have held this trade push down here, probably, yeah, I could hold on to this because we're retesting this breakdown level, right? Push down again, push up. I'd say maybe I'd exit around here, around 56.77, just to be cautious, right? Because we're actually pushing above this level here, the breakdown level, and we have big buying, right? So it's possible that I could stop out around this level. So the bad, I guess, the not waiting for my setup or not adhering to certain rules in my setup created a atmosphere of I guess desperation, right? Trying to get back the P&L. So trying to recover the green day and stuff like that. So it actually skewed my judgment and how I should operate, right? So that's a lesson learned here. One of the lessons is on these higher time frame pivots, you got to wait for it to develop. It might push above it. And we actually got a nice push above the daily level as well, right? Which was in line with it as well and created the uptrust here, right? So all I had to do was be patient. I could have entered right here where I stopped out, right? And could have had a beautiful trade, right? Still caught some of it when I came to my senses, but still not a good performance, right? And let me just pull across this real quick. So this is Tomby from Bookmap, right? And at this exact level, he says something important here. So let's see. I wanna let this play and let's see what he says here. So this is around the exact level of my trade. Now, his style of trading is different from mine, but he says something important here, right?
Does this tell you about what we're doing in TraderLab? And can you do something with this? Let me show you another little piece. Watch. Now, what's important and again, I'm only talking about me, it may be irrelevant to you. If this is important and this is important, and I get my sweep, which sets up a short. Now, I get it here. If you took a short here, you might take a stop. You would take a stop. But where is this? Where's my location? It's there. If you're just not putting pieces together, you might be selling this. You might be selling this. And I'm not saying you shouldn't, because we all take stops. So let's get over it. Let's all be adults. Okay? It's overhead and cost of production. This is not a business of, I knew it was going to do this. I didn't know it was going to get there. But here's what I know. If I'm going to be taking a short, if I take it here, I have to be willing to take a stop. If I take it here, I know I'm at an auction-based level. I'm not dancing with the market in the middle of nowhere. And yes, you can trade this if it has an edge. My edge is here.
Let me pause it right there. My edge is exactly at that spot as well. Now, he finds that edge in a different kind of, well, through volume profile and stuff like that. He finds the edge right there, right? I found the edge in my setup through the Wyckoff theory and the distribution structure, right? What I did was not trade the Wyckoff theory how it's supposed to be traded, right? So let's see what he says again.
There's my sweep. There's my liquidity. There's my selling icebergs. Here's my buy stop. See if you don't see something familiar. And it's random. But I'm going to show you something different. Right here, my jaw's on the table with yours because I don't know. Okay? Break. Now, let's come over here. What do we got here? See if this isn't interesting to you. This is advanced TraderLab methodology. Resistance.
All right, so he's going into his theory of how he trades and what he looks for, right? For me, I'm looking for that uptrust and to enter exactly at that level. So my risk to reward is good. If it pushes above this liquidity here, I'm out the trade, right? And that's another thing about my setups. They are supposed to work quickly, right? I'm not supposed to be lingering in the trade, right? So let me just open it up here. right? So the exact same setup, right? We have the liquidity above overhead, right? Pressing on price. We have the uptrust. We create the uptrust. We don't have much volume in the uptrust, right? We have more volume over here. We have volume over here, and this is more of an exhaustion, right? So basically here I'm using the VWAP, right, to enter the trade. So for me, as soon as it comes here, we get sellers, boom, enter the trade right there, right? I'm not waiting for this, like what he was saying, which he's probably right within his the way he trades and uses the volume profile, which is this right here, right? We come into the outer edge, right? You see his low volume up here. We getting all this activity here, right? And sometimes I gotta make sure I pay attention to this as well, right? Because it is part of the Wyckoff distribution theory as well. With the volume profile, you're coming to an outer edge where there is exhaustion, right? There isn't much buying going on here, or there isn't much activity compared to this level right here. So he's absolutely right in the way he's breaking this down. He has his levels here, what he was talking about, and I'm having my levels here, right? Camarilla R3, I have the uptrust above it. I have the potential breakdown of it coming in here, heavy selling, right? We have volume shooting up right here on the breakdown. Sellers are in control. We get the normal pullbacks, right? And we start getting our targets. We're coming down to the automatic reaction. Boom, exit the trade here. Should have waited to probably come down into this liquidity right here at 56.77, right? So yeah, that's my trading journal recap. I gotta make sure I remember that higher time frames might take a little more time to develop, and just be patient and don't go off tilt, you know what I'm saying? And let's just finish up here with some Tomby wisdom.
Break high becomes support. Location, location, location. Real estate, auction location. You notice it's all there. Level, high of the day, who knows? Sweep, location, location, location. Microstructure, right here. Microstructure, break, trigger. Where's my location to lean on? Right there. Advanced. Right here. Short. 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 Where to? Back to yesterday's high. Back to the micro composite.
Right. So it's basically kind of like the same setup. It's a different way of going about it. And all respect to Tomby, and thank you for displaying your wisdom day to day. You know what I'm saying? I've learned a lot from Tomby, just in the how to read the order flow, and also from Bruce from Bookmap. He does the all markets webinar every day. Well, not every day, but most days. And to read this order flow, it's a superior edge to read this order flow correctly, right? And to look at it over and over, the rotations, you definitely get a sense of when sellers take control, who's getting the absorption, who's getting absorbed, right? Running into this liquidity, right? Exhaustion, just above liquidity, just below liquidity at Camarilla R3, which was 56.91 down here. And we start racing towards it, enter the trade, right? So yeah, that's it, man. That's my trade recap. Just keeping it real transparent, because I really didn't like my performance today, so definitely had to do this video and keep a journal of just bad performance. Not only good performances, but the bad performances as well, which they teach you a lot, you know what I'm saying? And also a factor of why I took so much trades and I wanted to be right was because I was recording this to post it to YouTube as a live trade. So what did I want? I wanted to be right, and I wanted to be green on the day, posting a live trade. So that affects the psychology as well. But I gotta remember, if I'm trading live, I have the responsibility of demonstrating proper trading, right? So that today was not proper trading, that was over trading and going off tilt a little bit, right? So it's Mikael Shalomo. I hope you enjoyed my trade journal, me scolding myself and, just trying to become an elite trader. We need to be honest with ourselves and be transparent with others so they can give feedback. And I hope the coaches listen to this and they give feedback on this performance I did today as well. All right, y'all. Shalom.